in Abuja, where Professor Uche Waleke, who is a professor of capital markets, is standing by from Nasarawa State of the Nasarawa State University. And of course, here in Lagos at our global headquarters, Olalekan Labode, who is the head of research at Vetiva Capital Management. Peter Moses is from Cultures Capital, is a member of the research team, and of course, Robert Omotunde, who is the head of research at Afrinvest. Thank you, gentlemen, for being around. We will have to go live to Abuja now as we see the communique. That communique will be read. We'll get a feeler from us. We're getting, everyone is sitting down, getting ready for the presentation of that communique, as always, by the Central Bank Governor, Godwin Emefiele. But just we'll join our Abuja studio, Abuja, for that coming through from the headquarters of the Central Bank. That will be very important. Everyone will be listening in here and around the world. Gentlemen, let's have a few words. How do you think the final decisions will be? Let's take a round very quickly before we listen to the governor. Robert, let's get started with you. Still a do nothing?
Of course.
By what margin? Let's go. We don't have an idea how many members are present over the last two, but let's expect that everyone mark the register. So, what do you think the vote will be by consensus?
For consistency, if all the committee members are present, like they were in the last meeting, what you would expect is you don't expect, any major change from, the direction the last time.
Any member likely to vote for a rate hike or a rate cut?
Well, the member that voted for a rate hike, with all due respect, I don't know what the member was looking at, but whatever the member was looking at, the conditions are still more or less, the same, well, except for, further normalization of policies, which you've seen in the US, which again will justify the reason why the member is voting for a hike. So I will still expect the same pattern of votes.
No, anyone likely to vote for a rate cut?
I don't think any member of the committee. I mean, looking at
I'm just pushing. I need to push all. I need to push all
the
buttons.
And the situation now, again, apart from using monetary policy rate as an anchor rate, the CBN is already guiding, towards rate reduction in the money market for treasury bills and OMO.
Okay, Peter, let's take your take on this. Is there any likelihood any will vote for a hike or a cut?
I think the likelihood of a unanimous decision is actually very high. From the last meeting, yes, there was a member who voted for a rate hike. I think in this meeting, it will be very clear what the implication of that would be, to be very much reiterated, the impact of that for borrowing costs, the fact that it could further impede lending to the private sector, and at the same time also cause some deposit money banks to reprice their assets. So I think maybe in this meeting we'll see a case where the committee is actually much more proactive again by the ways it looks to manage that liquidity profile, that elevated liquidity profile over the second half of the year. But in all, I think it should look more like a unanimous decision. Okay,
a quick one from Lekan Olabode here. The governor is already seated and is about to start reading. Oh. So in a few seconds, where do you think a hike or a cut by any member?
I think there are going to be calls for hike. I think we are going to have more than one person call for hike. I think that, even the
statement... But would that be prevailing?
No, it won't be prevailing. I think we're going to hold. Even the statement of the CBN governor is going to sound more hawkish.
Okay, we're seeing the live pictures there from the headquarters of the Central Bank in Nigeria. That's in Abuja. All members seated, Godwin Emefiele and other members of the committee. And, of course, he'll be taking his presentation, the communique, in a few seconds from now. We're watching this very closely here. This is very important for the market. Whatever the decisions are, the market will react one way or the other. But more important is the guidance that we expect the central bank to take in terms of what will be the body language of the central bank. So it's not just the decisions you're listening to other things being said in that particular communique. Could be a number of pages, from 7 pages to 11 pages. Sometimes when things are a little bit difficult and they have to put all the background, the considerations, and the opinion of all members into it. So that's quite a very interesting day. We're looking at that very for you. But of course, don't forget to have this conversation all the way till 3 o'clock on the hour to bring you up to speed. But the more important part of this consideration will be, how do we trade today's decisions moving forward? And that's why we have all the panelists here today are traders and analysts. Let's take a listen to the governor.
The Monetary Policy Committee, MPC, held its 262nd meeting on Monday the 23rd and Tuesday the 24th July 2018 amidst fragile improvements in global growth and fragile domestic economic recovery. The committee reviewed developments in the global and domestic economic and financial environments, as well as the outlook for the rest of the year. The MPC also assessed the risks to price stability, credit growth, employment creation, and financial system stability in the short to medium term. 10 members of the Monetary Policy Committee were in attendance. Global economic developments. Global growth momentum remained promising despite rising trade tensions, Brexit concerns, and improving developments in the Korean Peninsula. Global growth was projected at 3.9% in 2018, compared with 3.7% in 2017, largely driven by the recovery in oil prices, accommodative monetary policy, and increased consumer spending in some advanced economies. In the advanced economies, growth was projected at 2.4% in 2018, the same as in 2017. The projection was expected to be driven majorly by fiscal stimulus in the United States, coupled with accommodated financial conditions in advanced economies. In the emerging market economies and developing economies, output growth was projected at 4.9% in 2018, up from 4.7% in 2017, due largely to sustained recovery in global commodity prices, particularly crude oil, rebound in investments, manufacturing and trade, as well as the strengthening of domestic consumption. The downside risk to global output growth remains the build-up in financial vulnerabilities, rising cost of borrowing in emerging markets and developing economies, fragile corporate balance sheets, escalating trade protectionism, uncertainties around the Brexit negotiations, heightened geopolitical tensions, and fiscal sustainability concerns. Global inflation was predicted at 3.2% in 2018, driven by rising energy prices and currency depreciations in some emerging markets and developing economies. In the advanced economies, inflation was projected to increase to 2.2% in 2018, up from 1.7% in 2017, as a result of increases in the cost of transport, housing, energy, and food. Similarly, inflation in the emerging markets and developing economies is projected to rise from 4% in 2017 to 4.4% in 2018 due to currency depreciations and rise in energy prices. The committee believes that global inflation is likely to remain subdued over the medium term relative to long-term trends despite subsisting monetary accommodation in some advanced economies. Domestic output developments. Economic recovery was sustained with a positive outlook over the medium term, anchored on oil price recovery, fiscal spending, and stability in the foreign exchange market. Data from the Nigerian National Bureau of Statistics, NBS, showed that real gross domestic product, GDP, grew by 1.95% in the first quarter of 2018, compared with 2.11% and a contraction of 0.91% in the preceding and corresponding quarters of 2017, respectively. The oil sector, which contributed 1.26% in 2018, compared with 0.76% during the fourth quarter of 2017, was the major source of the growth. The Purchasing Managers Index for manufacturing and non-manufacturing activities rose for the 15th and the 14th consecutive months to 57 and 57.5